is obtaining, accepting, and retention of an audit engagement. Obtaining, accepting, and retention of an audit engagement. Obtaining, accepting, and retention of an auditor engagement. Yes, auditors need to obtain the job. There are two techniques of obtaining that work. Ones are through the client referrals. The other ones are through the tendering procedures. Then you have now the part of accepting. So accepting is where now the auditor confirm that they're willing to be the client auditor. Then you have the element of retention, retaining the client. At the end of the audit period, auditors have a responsibility to review certain matters that could be having an implication on the next audit. After performing that review, they can come to a conclusion either they're going to retain the client or not. So right before that, auditors have an obligation. Auditors have an obligation. Auditors have an obligation to review certain important matters. To review certain important matters. To review certain important matters prior to accepting an audit engagement, prior to accepting an audit engagement, prior to accepting an audit engagement, and also after, being the client auditor, and also after being the client auditor. This enables the auditor. This enables the auditor. This enables the auditor to minimize audit risk. To minimize auditor risk. To minimize auditor risk. Once an auditor has been engaged, there are certain matters to be considered as part of the client acceptance procedures, as part of the client's acceptance procedures, as part of the client's acceptance procedures, as part of the client's acceptance procedures. Client acceptance procedures. Then let's go to a subtopic, matters to consider before acceptance of nomination. 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 An audit firm should only take on clients. An audit firm should only take on clients. An audit firm should only take on clients. An audit firm should only take on clients and work of an appropriate level of risk and work of an appropriate level of risk and work of an appropriate level of risk. For this reason, the firm will perform client screening. The firm will perform client screening. The firm will consider the following matters. The firm will consider the following matters. The firm will consider the following matters before accepting a new engagement. Before accepting a new engagement from the client. Before accepting a new engagement from the client. So number one matter to be considered, number one, professional clearance. Number one, professional clearance. Professional clearance. Professional clearance. So once you've been nominated by the client to be their auditor, that's one of the matters that you have to consider, obtaining professional clearance. So how do we obtain professional clearance as the prospective auditor? You need to confirm whether your appointment was valid. You need to confirm whether your appointment was valid by checking the shareholders resolution, confirming or where they voted you have been appointed as the auditor. The other one, you need to confirm whether the outgoing auditor or the preceding auditor, his removal was valid. Was he removed as per the Company Act requirement? Did they follow the legal procedures in removing that auditor from the office? And now the other one, there is also a recommendation that you need to communicate with the outgoing auditor as a professional courtesy requirement. So those are the issues are considered as part of obtaining professional clearance. Confirming whether your appointment was valid, confirming whether the previous auditor was also validly removed from the office, and also ensuring that you get in touch with the outgoing auditor. Number two is the preconditions for an audit. Number two matter is the preconditions for an audit. The preconditions for an audit. So before you accept the nomination, you need to establish whether the preconditions of an audit do exist. The preconditions of an auditor do exist. For example, you need to confirm, does the client uses the applicable financial reporting framework in preparing their financial statements? Do they use the applicable financial reporting framework in preparing their financial statements? The other one, you need to confirm from the management whether they do acknowledge their responsibility of preparing the financial statements in accordance to the identified financial reporting framework. The other matter, you also need to get an acknowledgement from the management whether they do understand their responsibility of putting in place an effective internal control system. You also need to get an acknowledgement from the management that they will provide you with the information that's deemed necessary for performing the audit. The other one, you also need to confirm with the management whether they will provide you with unrestricted access to the company premises, and the accounting records at any given time. The other one, you also need to confirm from the client management if they will provide the draft accounts on time to show how the audit work is completed as per the time duration set. Those are some of the matters considered as part of what we call the preconditions of an audit. The next point is the availability of resources. Number 3, availability of resources. Availability of resources. So you need to confirm whether you have adequate resources, both the financial resources, the human resources, the staff, and also the time. You have time to allocate to that client. Number 3 is, not number 3, point number 4, independency and objectivity. Independency and objectivity. Independency and objectivity. So you need to confirm whether you have the ethical requirements. Have you met the ethical requirements? Are you able to maintain your independency? Are you also able to maintain objectivity? In short, you're asking yourself whether you're ethically qualified to be the client's auditor. Number 5, reputation of the client. Reputation of the client. Reputation of the client. You must do the due diligence, proper client screening to confirm whether they are reputable. Do they have a good reputation? Because if you fail to do so, that may expose you to an engagement risk and may also injure your name as the auditor. Next, you need to confirm professional competence. Next factor, professional competence. Professional competence. In our previous chapter, under the fundamental principles, one of the principles we discussed was the professional competency and due care. And we said that as a professional accountant, you should only accept that engagement, which you know that you have experience, knowledge, and skills which are well. So you also need to ask yourself, do you have the experience? Do you have the skills and the knowledge to do the job? Next factor is the management integrity. Management integrity. Management integrity. So you need also to check what's the level of the honesty, the straightforward and truthfulness of the client management. Are they people who are trustable? Are you able to believe maybe on their words? Is there consistency between their action and their words? Because fail to do so, that may also expose you to engagement risk. The other one is the risk assessment. Risk assessment. Risk assessment. You must also consider the risk in the client entity. Maybe you can just add risk assessment, e.g., poor performance, poor performance, poor performance, poor controls, etc. Poor controls, etc. So you need to check on those ones because they may lead you to issue an appropriate auditor report as part of the auditor risk. So proper assessment is required for the client risk exercise. And next is the professional fees to charge the client. Professional fees to charge the client. Professional fees to charge the client. Yes, also need to consider how much audit fees are you going to charge the client? Yes, how much fees are you going to charge the client? And you must also ascertain, does the client has the capability to pay the audit fees? Does the client has a capability to pay the auditor fee? Because the non-payment of the audit fees by the client, the non-payment of the audit fees by the client may create what you call the conflict of interest, and that one may impair your independency and objectivity as an auditor. Next factor that you also need to consider is money laundering. Money laundering. Money laundering. In bracket, client due diligence, money laundering, in bracket, client due diligence, money laundering, in bracket, client due diligence, client due diligence, money laundering, in bracket, client due diligence, i.e. the firm must comply. The firm must comply with the money laundering regulations. The firm must comply with the money laundering regulations. The firm must comply with the money laundering regulations. The firm must comply with the money laundering regulations. Yes, we know what's money laundering. Money laundering is whereby the money which has been earned from dirty sources is brought into the system to appear as a clean money. Yes, this money could have been earned from illegal activities such as smuggling, drug trafficking, poaching, bribery, etc. So the individual wants to make them to appear into the system as a clean money. So as a good auditor, you should always be suspicious of any money laundering activities by the client. So you must do the due diligence, proper client screening, so that you're able to comply with what you call the money laundering regulations, which require the auditor to screen the client before they accept the appointment or the nomination to be their auditor. There are so many indicators that could be indicating that the client is engaging in suspicious money laundering activities. So you as an auditor, you need to apply your professional judgment in assessing the matter and see what you can do if maybe you're suspecting that the client is engaging in such kind of activities. So we have mentioned quite a number of issues to be considered prior to accepting the client toward engagement: professional clearance, preconditions for an audit, reputation of the client, professional competence, independence and objectivity, professional fees, risk assessment, resources, management integrity, then money laundering. So let's go now to the matters to be considered after acceptance of nomination. Matters to be considered after acceptance of nomination. Matters to be considered after acceptance of nomination. So you've now said yes, you accept now the challenge to be the client auditor. So what are certain things that you need to consider after accepting that nomination? So let's go to the procedures. So indicate that the following procedures are undertaken after accepting nomination. The following procedures are undertaken after accepting the nomination. The following procedures are undertaken after accepting nomination. Number one, ensure that the preconditions of an audit are present. Ensure that the preconditions of an audit are present. Ensure that the preconditions of an audit are present. Ensure that the preconditions of an audit are present, i.e. Point A, i.e. point A, check to ensure that the financial reporting framework, used by the client is acceptable. Check to ensure that the financial reporting framework used by the client is acceptable. Check to ensure that the financial reporting framework used by the client is acceptable. Then B, obtain an acknowledgement from the management. Obtain an acknowledgement from the management. Obtain an acknowledgement from the management that it understands its responsibility, that it understands its responsibility of preparing financial statements, of preparing financial statements, of preparing financial statements in line with the identified financial reporting framework. In line with the identified financial reporting framework. In line with the identified financial reporting framework. C, obtain an acknowledgement from the management. Obtain an acknowledgement from the management. Obtain an acknowledgement from the management that it understands its responsibilities to implement control systems, that are relevant to ensure that the financial statements are not materially misstated. Then D, obtain an agreement from the management. Obtain an agreement from the management. Obtain an agreement from the management that they will provide you with all information. Obtain an agreement from the management that they will provide you with all the information, that they are aware of, is relevant to the preparation, of the financial statement, and that they will give any additional information, that may deem necessary for the audit. E, obtain an agreement from the management. Obtain an agreement from the management. Obtain an agreement from the management that they will provide draft accounts, on time, that they'll provide draft accounts on time to enable the completion of audit work, to enable the completion of audit work, to enable the completion of audit work within the agreed deadline, within the agreed deadline, within the agreed deadline, within the agreed deadline. F, obtain an agreement from the management, obtain an agreement from the management that they will give unrestricted access, obtain an agreement from the management that they will give unrestricted access, unrestricted access to all persons, within the entity, within the entity, whom the auditor may wish, to gather audit evidence, whom the auditor may wish to gather audit evidence, whom the auditor may wish to gather audit evidence. Then procedure number two, ensure that your appointment is valid. Ensure that your appointment is valid. Ensure that your appointment is valid and obtain evidence, by reviewing copy of the shareholders' resolution. By reviewing copies of the shareholders' resolutions. By reviewing copies of the shareholders' resolutions. Number three, ensure that the removal of the predecessor auditor, ensure that the removal of the predecessor auditor, ensure that the removal of the predecessor auditor is valid. Predecessor auditor is valid by reviewing copies of the shareholders' resolution. By reviewing copies of the shareholders' resolutions. By reviewing copies of the shareholders' resolutions. Number four, draft and sign the engagement letter. Draft and sign the engagement letter. Draft and sign the engagement letter. And request the client to acknowledge receipt. And request the client to acknowledge receipt of the letter. And request the client to acknowledge receipt of the letter and to agree with the terms therein. And to agree with the terms therein. And to agree with the terms therein. So those are the procedures after accepting appointment or nomination. Those are the matters to be considered by the auditor upon accepting the client nomination to be their auditor. So let's have a look at a question upper. So check a question November 2016. Check a question. Yes, the last point. Draft and sign the engagement letter. draft and sign the engagement letter, and request the client to acknowledge receipt of the letter, and to agree to the terms therein, So check a question on November 2016, question 1. Question on November 2016, question 1. November 2016, question 1. A, question 1A. November 2016, question 1A. November 2016, question 1A. I will request Joyce. Joyce, read for us that question. Joyce, read for us the question.
November 2016, question 1A. In the context of international standards of auditing, ISA 2010, agreeing the terms of audit engagement, discuss 6 steps the auditor should undertake to establish whether the preconditions for an audit were present. 12 marks.
So thank you. Yes, to establish whether the preconditions of an auditor are present. Sasa hapo kuna the keywords that can aid you to answer that question. There are 6 step procedures which you need to know. The very first one is on the financial reporting framework. Financial reporting framework. The financial reporting framework. So we need to check, are the client's financial statements prepared in accordance to the identified financial reporting framework? The second area is on the financial statements. The financial statements. And here you need to obtain acknowledgement from the management. Do they understand the responsibility to prepare the financial statements in accordance to the identified financial reporting framework? Number 3 is ICS. Again, the management responsibility, ICS. Number 4 is on information that should be provided with what? Audit information. Number 5 is on what we call draft accounts. Managers will provide you with the draft accounts on time. Now, number 6, we should be talking about what? Unrestricted access. So the managers provide you with unrestricted access to their books of accounts or to their premises at any given time. So this matters about what forms the procedures in establishing whether the precondition for an auditor are present. So next we go to engagement letter. A subtopic, engagement letter. Yes, so after reviewing those matters, you've accepted to be their auditor. The next phase of it is to draft an engagement letter and request the client to acknowledge the receipt. So engagement letter is just a contractual letter. It is written by the auditor to the client, confirming all those verbal discussions pertaining to the client acceptance procedures. This letter, it confirms the managers, it outlines the responsibility of the auditor and also the responsibility of the management with regard to audit. At the same time, here the letter outlines some important matters pertaining to the audit to be undertaken by the client. So basically, an engagement letter is a contract entered into between the auditor and the client. So what we need to know on this area of the engagement letter is to understand the meaning of the letter, to understand the procedures under which the auditor do use to send this letter to the client, to understand the purpose and the content of the engagement letter. So engagement letter is prepared in accordance to the ISA 210. So as you write there, the subheading engagement letter in bracket ISA 210. Engagement letter, then in bracket ISA 210. Then you put down the following. So what's an engagement letter? This is a letter written by the auditor. This is a letter written by the auditor. This is a letter written by the auditor and submitted to the client, and submitted to the client, and submitted to the client, acting as a written confirmation, acting as a written confirmation, acting as a written confirmation of the auditor's acceptance, of the auditor's acceptance of the appointment, of the auditor's acceptance of the appointment, and setting for the contractual relationship, and setting for the contractual relationship, and setting for the contractual relationship between the auditor and the client, between the auditor and the client, between the auditor and the client. Full stop. It details the scope of the audit. It details the scope of the audit. It details the scope of the audit, responsibilities in the audit, responsibilities in the audit, responsibilities in the audit, responsibilities in the audit, basis of charging the audit fee, basis of charging the audit fee, basis of charging the audit fee, and all the other terms of audit engagement, and all the other terms of audit engagement, and all the other terms of auditor engagement. So, yes, Jacqueline, let me repeat your part introduction and engagement letter. This is a letter written by the auditor, and submitted to the client, acting as a written confirmation, acting as a written confirmation of the auditor's acceptance, of the auditor's acceptance of the appointment, of the auditor's acceptance of the appointment, and setting for the contractual relationship, and setting for the contractual relationship, and setting for the contractual relationship between the auditor and the client. Between the auditor and the client. Let's go to the purpose of the letter. Purpose of the letter. Purpose of the letter. Purpose of the letter. So why is this letter important in auditing? Purpose of the letter. So point one, to define the auditor's responsibilities. To define the auditor's responsibilities. To define the auditor's responsibilities during the audit function. During the audit function. During the auditor function. In order to avoid organization possible misunderstandings. Organization possible misunderstandings which may arise. Organization possible misunderstandings which may arise. Which may arise. Number two, to clarify the statutory. To clarify the statutory and other responsibilities of the directors. To clarify the statutory and other responsibilities of the directors. To clarify the statutory and other responsibilities of the directors. Number three, the letter serves as a written confirmation. The letter serves as a written confirmation. The letter serves as a written confirmation of the auditors verbal acceptance of the auditors verbal acceptance to take up the engagement. To take up the engagement. To take up the engagement. The number four, such a letter may also be useful. Such a letter may also be useful. Such a letter may also be useful at a later date. At a later date. At a later date. In cases of disputes. In cases of disputes between the auditor and the client. Between the auditor and the client. Between the auditor and the client. So those are now the purposes of that letter. The reasons of writing the engagement letter or the objectives of the engagement letter. So let's take some 10 minutes break, then we come back. We continue the engagement letter. So Dwindle, let's move on to the contents of the engagement letter. Contents of the engagement letter. Contents of the engagement letter. So what are some of the items contained in the letter? So number one, an indication an indication of the objective of the audit, an indication of the objective of the audit of financial statements, or financial statements, or financial statements. Number two, an indication of the respective responsibilities, an indication of the respective responsibilities of the auditors and the client's officials during the audit. Number three, a brief description of the scope of the audit, by reference to the client's financial reporting framework. By reference to the client's financial reporting framework. Number four, details of correspondences. To be exchanged. Details of correspondences to be exchanged. Details of correspondences to be exchanged, e.g. management letters, and representation letters. Five, an indication of inherent limitations. Of an audit for purposes of reducing the expectation gap. For the purposes of reducing the expectation gap. Number six, an indication that the auditors will have unrestricted access to relevant records, documents and information required for audit purposes. Then seven, details of planning arrangements. details of planning arrangements, details of planning arrangements, including all key events, which will take place during the audit, which will take place during the audit, which will take place during the audit. Then 8, an indication of the basis of charging audit fees, an indication of the basis of charging audit fees, an indication of the basis of charging audit fees. Next, an indication that the auditors may involve an indication that the auditors may involve other experts, an indication that the auditors may involve other experts in the audit process, in the auditor process, in the auditor process. Number 10, a reminder to the management, a reminder to the management of their statutory responsibilities, of their statutory responsibilities, of their statutory responsibilities, including those of financial reporting, including those of financial reporting and disclosure requirements, including those of financial reporting and disclosure requirements. So those are some of the items contained in drafting the engagement letter. So let's now move on to the procedures for sending engagement letter. 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 So you need to take note that this letter can be sent for new client and also the existing client. The new client is now your first-time client to provide auditing services to, while existing client already you have a continuing work relationship. So for a new client, it is a must that you have to send an engagement letter. While for the existing client, it's only requested where there is some significant changes, for example, that could be affecting the material limitation of the scope of work. In that case, that letter needs to be revised and sent to the client again. So let's look at the procedures for sending the engagement letter. So where does the auditor begins? When it comes to drafting and having this letter to be signed by the client officials. So which is the first procedure? Number 1, the auditors should normally hold discussion. The auditors should normally hold discussions. The auditors should normally hold discussions with the client, regarding various issues, including the scope of the work to be performed, the scope of the work to be performed, the scope of the work to be performed, respective responsibilities, respective responsibilities, the timing of audit field visit, the timing of audit field visits, etc. So that's the first thing auditors need to do, having a discussion with the client and agreeing on certain issues, like there the scope of the work to be performed, respective responsibility, the timing of the audit field visit, etc. The number two, the auditors must also ensure, the auditors must also ensure that important matters that important matters such as key events which will take place are also discussed. Such as key events which will take place are also discussed. Such as key events which will take place are also discussed. Number three, the auditors are then in a position to draft the letter. The auditors are then in a position to draft the letter. The auditors are then in a position to draft the letter and have it acknowledged by the client officials. Such a letter is required. Such a letter is required to be sent. Such a letter is required to be sent to all new clients. Such a letter is required to be sent to all new clients and to be revised where necessary. For existing clients. And to be revised where necessary for existing clients. Then number four, where the client's management may have not reaffirmed the letter. Yes, to reaffirm simply applies to acknowledge. Yes, where they have not acknowledged the letter, or just to reaffirm the letter, e.g. due to misunderstanding, the auditor may take the following measures. The auditor may take the following measures. Point 1, seek appropriate explanation from them. Seek appropriate explanation from them. Seek appropriate explanation from them. Yeah, so you need to seek appropriate explanation from them. Number 2, or B, make clarification on any matters of disagreement. Make clarifications on any matters of disagreement. Make clarifications on any matters of disagreement. C, explain to the client. Explain to the client the significance of the auditors. The significance of the auditors retaining a copy of such letter. So explain to the client the significance of the auditors retaining a copy of such letter. Then D, any refusal by the client, any refusal by the client, any refusal by the client to reaffirm the engagement letter, to reaffirm the engagement letter, to reaffirm the engagement letter may result to auditors, may result to auditors, may result to auditors to decline taking up the appointment, to decline taking up the appointment, to decline taking up the appointment, to decline taking up the appointment. So that's now the procedures of sending the letter. So let's go to subtopic circumstances. Circumstances that may necessitate. Circumstances that may necessitate a new letter of engagement to an existing client. Circumstances that may necessitate a new letter, a new letter of engagement to an existing client. Circumstances that may necessitate a new letter of engagement to an existing client. So what are some of the conditions that may call for a revised engagement letter to be sent to existing client during the recurring period of an audit? So 1 is significant change in the senior management, a significant change in the senior management, a significant change in the senior management, a significant change in the senior management, e.g. the board of directors, e.g. the board of directors, the CEO, etc. B, significant change in the nature, significant change in the nature and the size of the client's business, significant change in the nature and the size of the client's business, significant change in the nature and the size of the client's business. Next, change in the ownership of the company, change in the ownership of the company, change in the ownership of the company. Next, change in the financial reporting framework, change in the financial reporting framework, change in the financial reporting framework. Next, change in the legal and regulatory requirements, change in the legal and regulatory requirements, change in the legal and regulatory requirements. Next, an indication that the client misunderstood, an indication that the client misunderstood the objectives and the scope of the audit. The objectives and the scope of the audit. The objectives and the scope of the audit. So those are some of the conditions which may call, sorry. So those are some of the conditions that may call for a revised letter to be sent to the client. So let's go to reasons why it will be necessary to review the engagement letter. Reasons why it will be necessary to review the engagement letter. Reasons why it will be necessary to review the engagement letter. Reasons why it will be necessary to review the engagement letter. Reasons why it will be necessary to review the engagement letter. So why is it important to revise the engagement letter for a new for an existing client? So one, to accommodate additional scope of work, to accommodate additional scope of work, to accommodate additional scope of work, since the company has opened new branches, since the company has opened new branches, to accommodate additional scope of work, since the company has opened new branches. Since the company has opened new branches. Two, to ensure that any misunderstandings are clarified, to ensure that any misunderstandings are clarified, to ensure that any misunderstandings are clarified. Three, to redefine the auditor's scope of work, to redefine the auditor's scope of work and responsibilities arising from the change, and responsibilities arising from the change. Four, to remind the client of their responsibilities, to remind the client of their responsibilities with respect to financial statements, to remind the client of their responsibilities with respect to financial statements. And next, to accommodate any changes, in the applicable laws and legislation, to accommodate any changes in the applicable laws and legislation, to accommodate any changes in the applicable laws and legislation. Next, to revise the basis of charging the audit fee, to revise the basis of charging the audit fee, to revise the basis of charging the audit fee, arising from the increase in the size of the entity, arising from the increase in the size of the entity, arising from the increase in the size of the entity. Next, to revise the basis of charging the audit fee, to revise the basis of charging the audit fee, arising from the increase in the size of the entity, to revise the basis of charging the audit fee, arising from the increase in the size of the entity, arising from the increase in the size of the entity. Next, number 7, to capture the possibility of engaging internal auditors if previously not, to capture the possibility of engaging, internal auditors if previously not, So you can check on this question, May 2017, question 3, part B, May 2017, question 3, part B, May 2017, question 3, part B. May 2017, question 3, part B. So I'll ask Naomi to read for us that question. Naomi.
Yes, sir.
Naomi. We're waiting
Yes,
for you,
sir.
Naomi. Do you have the question?
I'm in a noisy place.
Or you are in a noisy place?
Yes.
Okay, so let me read the question now that Naomi is in a noisy place. Your audit firm was recently appointed the auditor of Baraka Limited. The company has a subsidiary based in Mombasa, and its auditor had retired the previous year. So required, Roman 1, enumerate 6 factors that would influence you in determining whether or not to send a separate engagement letter to the subsidiary. Then Roman 2, if the audit of Baraka Limited was a recurring audit, suggest 6 factors that would make it appropriate for you to send a new engagement letter. Yeah, so Roman 2, that question is quite easier for us to answer. Same if the audit of Baraka Limited was a recurring audit, that implies there's an existing client. So suggest 6 factors that would make it appropriate for you to send a new engagement letter. And those points, we just listed them there as part of the circumstances which may necessitate sending a new engagement letter to an existing client. Is like a significant change in the senior management, significant change in the nature and the size of the client's business, change in ownership of the company, change in the financial reporting framework, change in the legal and regulatory requirements, an indication that the client misunderstood the objectives and the scope of the audit, etc. So on part 1 is quite different. Part 1 of that question says enumerate 6 factors that would influence you in determining whether or not to send a separate engagement letter to the subsidiary. So this one now calls for just a general knowledge application, because we have now a subsidiary, you have the parent company. So why will you send separate engagement letter? What could be the reasons why? What could be some of the factors that could contribute from you to send a separate engagement letters? Just one will be the material scope, the material limitation scope of the audit, the material limitation scope of the audit. That means the two entities are quite different in terms of the activities. So the extent of maybe the old procedures we're going to apply will not be the same. In that case, you can consider to send separate engagement letter. Another one is maybe the differences in the responsibilities, between the management of the parent company and the subsidiary company. The other one is maybe the objectives, differences in the objectives to be achieved, So the other points you can think of them. Yes, Elizabeth and Asema repeat point 7 on the reasons. Point 7 on the reasons to capture the possibility of engaging internal auditors if previously not. To capture the possibility of engaging internal auditors if previously note. Yes, Evelyn pia kuna a concern here. So those who have got the notes, or from the introduction part, you can assist Evelyn. Those who have got the notes on the introduction part, you can assist Evelyn. Evelyn has a concern there. She was late in class. So Elizabeth Arasema, the one that started with to revise the basis. Oh, that was number 6, huh? To revise the basis, of charging the audit fee, to revise the basis of charging the audit fee arising from the increase in the size of the entity. Arising from the increase in the size of the entity. That is it, Elizabeth. So we can end there for today. Then when we meet next time, we shall continue the rest of that chapter.